Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you from the Singapore Fintech Festival, and joining me for this segment, we have Michael Sheren, President and Chief Strategy Officer of MVGX, to discuss COP28 and what that could potentially mean for the financing gap in climate action. Michael, it's great to see you as always. Welcome back to Trade Talks.
Great to be back, Joe.
Yeah, let's talk about climate change and, of course, Southeast Asia, one of the more prominent areas of the world when it comes to that. What are some of the unique opportunities and limitations when it comes to the green transition, and how can the region harness tech and fintech to bolster the client defense?
Yeah. No, all great questions. Well, first of all, Asia needs roughly $2 trillion of cash flows every year to really meet the requirements they have for sustainable development. And that's mostly around energy. And so if you're looking for the opportunities, Indonesia, Malaysia, all these different countries have huge opportunities for substitution into the renewable energy space. I don't know if you just saw, there was an announcement about an hour ago that China and the US are going to agree on renewables and to really push for that globally. And Asia is the biggest opportunity for it. It's the fastest growth, it's got killer opportunities. It's about harvesting and really focusing the money in that direction to meet those requirements, those demands.
Yeah. And despite criticism, carbon markets continue to play an important role in climate financing. What are the main challenges today, and why are they still important to emerging markets?
Yeah, the main reason they're important for emerging markets is ideally a carbon market with high integrity can funnel money into those emerging markets to help them do some of that sustainable development around renewable energy and things of that sort. But as you know, it's been a really rough year for the carbon markets, the private ones, particularly in the forests. There was an issue around baseline data, because you can have jurisdictional data, which is for the entire country. So that would be for Indonesia. But if you're a private group and you're just making up your own baseline and you're not contributing it to the country's one, you don't have a relative basis for that, and also there's not uniform regulatory regime for it. So consequently, a lot of people, I'm sure very well intended, basically kept on going like this, but it really didn't give you the integrity. So when buyers of the carbon credits didn't know what they were buying. So I think there needs to be a desperate regrouping in this area, get the data into the jurisdictional, get some good regulatory regimes in place, and that will hopefully bring back the integrity needed to drive that money into the emerging markets.
Let's talk more about policy activity in the next coming months here. The introduction of new tariffs, such as the EU's scheme that they have going on there. What should we be looking for in that region?
It is all about regulation. So it's gone from regional and it's moving to global. So to your point on the EU, so there's a border adjustment tax. So what that basically means is anything being shipped in from Asia or from any other place in the world into the European Union need to demonstrate that they are not using high carbon methodology. So if you build a car in Indonesia and the per unit is 50,000 tons, but it's only 10,000 tons in the EU, you need to basically demonstrate that yours new processes brings it down to the same amount. What they don't want to encourage is either supply chain manufacturing or completed manufacturing coming in with higher footprints. So what that means is everyone has to start measuring what their emissions are and demonstrating that they meet those EUs. Otherwise, they won't be able to ship in. And as you know, Asia is the home of supply chains.
Right. Well, that is true. As we look at COP, is it COP? COP28.
COP, yeah.
COP. Okay, I hear it in two different ways, so I just want to make sure I'm saying it right here. That's at the end of the month. It's a big topic of conversation that we're having here at SFF. What do you think the top three priorities are going to be at this year's conference, and why?
Well, this conference, there's going to be a lot of pressure on it. Last year in Egypt, basically all that really came out of it was a pledge for $100 billion for some of the emerging markets. And this year, there's a lot of pressure. The UAE is obviously a major fossil fuel country, and they've said outright that they want to be moving towards sustainability, but they're going to have to put some real announcements on the table that demonstrate it. I have no inside information on what they will be doing, but I think people will be looking for consensus around a hard commitment in language about phasing down fossil fuels. Will they be able to, if you're one of the fossil fuel output countries, right, can you lead that? Well, that might be actually a really interesting thing to do. It's almost easier if you're part of that. So people are looking for some real leadership and some changes, some big ones. And I'm not sure. People are not, there's not a clear vibe on what's going to happen. Often there's a lot of things tucked in the pocket that people pull out and say, here's a big announcement. Here's going to be a big announcement. But I think the announcement we just referred to with the US and China around renewables, that could actually maybe spill into it and be a catalyst for a better focus on making sure that the renewable financing and starts getting rolled out through the emerging markets.
All right, Michael, appreciate the insight as always. Thanks for joining us on Trade Talks, and thanks for joining me from the Singapore Fintech Festival. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.